Let's talk about trade discounts. A trade discount is nothing at all like a sales discount. What was the purpose of offering a sales discount? Get my customers to pay me faster, okay? So I can go spend it and pay my bills and all those good things. That's a sales discount. A trade discount is simply a reduction in the list selling price of an item. It's kind of like you walk into Belk. Most everything in Belk's is on sale, isn't it? If it's not on sale this week, it's probably going to be on sale next week, isn't it? So you go find something you like at Belk's on the rack and it's $100. But there's a sign above it on that rack that says take 40% off. It's a reduction in the selling price. Now many companies will publish a catalog saying, here are my prices. But I might sell effectively to different customers at different prices by giving them different discounts. Maybe you are my long-term customer, you've done business with me for years, so maybe I'll knock 20% off my list price for you. Or maybe you're coming in to make a very large purchase and I might give you a 30% volume discount. So I can publish one list of prices, but then sell to different customers at different prices by giving them different trade discounts. So let's go back to Belk's. We bought that item, $100 selling price, but it's 40% off. Is it really a $100 transaction to either party? It's a $60 transaction, isn't it? A trade discount doesn't show up anywhere. A trade discount simply reduces the amount at which we record a sale or purchase. Doesn't show up anywhere in my journal entry. Why offer a trade discount again? We're trying to get people to buy from us. If we reduce the price, hopefully they're going to buy more from me then. Trade discount does not show up on anyone's books. It doesn't show up on the buyer's books. It doesn't show up on the seller's books. If you try to put it there, it does not work. Okay? It simply reduces the amount at which you record the transaction. Princess Leia sells for cash one lightsaber to Darth Maul. Lightsabers have a $2,500 list price, but oh, Leia, she likes Darth Maul. She gives him a 40% trade discount. Well, we need to decide at what amount we are going to record the sale. $2,500 is where we start, but how much would my discount be on that sale? $1,000. 2,500 times 40% says I'm going to knock $1,000 off of it. How much is the actual sale? Well, 2,500 minus the 1,000 says this is a $1,500 transaction. Put a big star by the 1,500 to draw a box around it or something. This is a $1,500 transaction. It is not a $2,500 transaction, and the 1,000 is not going to show up anywhere. You're going to only record it at 1,500. So draw a box around that and put a star around it. From the buyer standpoint, it's a $1,500 purchase. From the seller standpoint, it's a $1,500 sale. So let's make the journal entry. We're going to be the seller. What do I debit? Cash. Good. All right. So we're going to debit cash for the $1,500. What do we credit? Sales for $1,500. Now again, I just asked you to make the first entry. There would be a second entry, right, which would be what? Debit, cost of goods sold, and credit merchandise inventory. I'm just not having you make that one right now. You really would otherwise. Yes. The discount, do you see the $2,500 in there anywhere? No. Do you see the 1,000 in there anywhere? No. Don't try to put it in there. It will not work. It is a $1,500 transaction. At what amount would Darth Maul record the purchase? $1,500. That's recorded in his book. Now let's assume he's buying this item to turn around and resell it. Okay, everybody buys to turn around and resell. We're going to assume that. What do I have more on? Merchandise inventory is an asset, goes up with the debit. And what do I have less of? Cash. Notice, $1,500 is the amount. No $2,500, no $1,000. It is a $1,500 transaction. So trade discounts don't show up anywhere.
Princess Leia sells 20 robes on account to Palpatine, 210 net 30. Robes have a $500 list price. Give them a 20% trade discount, 5% sales tax. The robes initially cost her $120 each. Lots of data in there. We need to use it whenever we need each piece of data. We don't necessarily need all of it to begin with here. If we're selling 20 robes for $500 each, that would be $10,000, but then we knock the 20% off for the trade discount, says that's an $8,000 sale. Or the other way we could calculate that is to say that instead of the robes selling for $500 each, if we knock 20% off, that means they're really selling for $400 each. Times 20, again, gives you an $8,000 sale. So, regardless of which method you choose, it's an $8,000 sale. It is not a $10,000 sale. The $10,000 won't show up anywhere. The $2,000 is not going to show up anywhere. It's an $8,000 transaction. Our sales tax would be $400. 8,000 times 5% is $400. And then the cost of what we sold would be 20 robes, $120 each, or $2,400. First off, we're going to journalize making the sale. On Princess Leia's book, she's the seller. Now, is this a cash sale or a credit sale? It's a credit sale. I actually told you, I believe, on account. Even if I hadn't, you would know it is a credit sale because I gave you terms. Anytime you see terms, it's a credit sale, guaranteed. 210 net 30 or whatever they might be, that is automatically a credit sale. What do I have more of? Accounts receivable is an asset, and assets go up with a debit. How much does my customer owe me? Well, $8,000 for the merchandise plus $400 in sales tax says they owe me a total of $8,400. What else do I have more of? Sales. Sales is revenue. Revenue goes up with a credit. The credit to sales, though, is for simply the $8,000. That other $400 isn't my money to keep, is it? I've got some money. I owe it to the government. What type of an account does that sound like? A payable. It's a liability. Specifically, we will call it sales tax payable. It's not my money to keep. I have an obligation to send that in to the state government then. My second journal entry updates my inventory. When I make a sale, what happens to my inventory? It goes down. Part of it's gone. Now, inventory is an asset, and assets go down with a credit. So you might want to skip a line and go and record a credit to merchandise inventory. But the amount of that entry is how much those items cost me. They didn't cost me the $8,000. They cost me, what, $2,400 is my credit to merchandise inventory. When I bought inventory, it was an asset to me. It became an expense to me when I sold it, and we specifically call that expense cost of merchandise sold. We can abbreviate that COMS or COGS is fine. What's important is to know is that cost of merchandise sold is an expense, and expenses go up with a debit. How did we do on this transaction? I think we did good. We bought something for $2,400. I sold it for $8,000. So I made, what, $5,600 on that transaction? Notice, do I make a journal entry for $5,600? No. When I go to prepare my income statement, I'm going to show having a profit of $5,600 because I'll have revenues of $8,000 and expense of $2,400. The difference between those two, between my sales and my cost of goods sold, then will be my gross profit. How much of a discount can Palpatine take if he pays within 10 days? Well, what % discount do we offer him? 2. Now, when we take that 2% discount, let's take it off of the sales revenue only, not off the tax, just off of the revenue portion. So 2% times my $8,000 says that he will save $160. Well, how much does he owe me in total? $8,400 in total, right? But he gets to save how much? $160. So he will actually pay me then $8,240. Well, now we have all the amounts that we need to make our journal entry. So let's make a journal entry to record him paying me, assuming he pays me on day 10 and takes the discount. I'm on the receiving end. What do I have more of? Cash. How much cash did I receive? $8,240. What do we have less of once he pays me? Accounts receivable. Good. I have less accounts receivable. Does he owe me anything once he makes this payment? No. Accounts receivable is an asset. It's going down with a credit. So if you would skip a line in between, skip a line, we're going to have a debit of cash. We're going to have a credit to accounts receivable for the $8,400. To make that entry balance, I would need a debit of $160, and the debit goes to sales discounts. What type of an account is sales discounts? Contra what? It's a contra revenue. It's a contra account to sales or a contra revenue account then. Sales or revenue has a credit balance. Its contra accounts have a debit balance. This account is called sales discounts. The only person who can use that account is the seller. The buyer can never use the account of sales discounts because that wouldn't make sense, right? Only the seller uses the account of sales discount. What if instead Palpatine paid on day 30? How much would he pay me then? The full amount, the $8,400. What do I have more of? Cash. An asset goes up with a debit for $8,400. And what do I have less of? Accounts receivable. An asset goes down with a... So if the customer doesn't take the discount, it doesn't show up anywhere. That really is not a new entry to us. That's a Chapter 2 entry right there. So in both cases, we debit cash for what we receive. We credit accounts receivable for the total. If they take the discount, that gets debited to the contra revenue account of sales discounts. How about in the first entry? Why couldn't I have done this? Why couldn't I have debited cash for $82.40 and credited accounts receivable for $82.40? It would leave me with a balance of $160 in accounts receivable. If I only credited accounts receivable for $82.40, it would leave me with a balance of $160. It looks like the customer still owes me $160. Do they still owe me anything? No. So I have to take that full balance off of my book.